We've got a few minutes to go here before we get the producer price index numbers here this morning, which could be market moving. We'll have to see. Yesterday's CPI report kind of didn't do a whole lot to the markets in terms of market volatility. In some ways, it gave the stock market another excuse to run higher because yesterday's CPI report came in line with expectations. It didn't scare the market too much, and the market's been in party mode. So, not turning off the music allowed the stock market to keep going higher. The question today is the producer price index potentially going to spook the market anyway? Are we going to see an uptick in the PPI or the producer price index? What's the difference between these two? Well, the consumer versus the producer are two different ends of the supply chain kind of thing, right? If you think about, when you go to the store and you pay for goods there's been a huge, process in order for you to be able to purchase that product off the shelf, right? The supply line to get there. Well, the producer price index looks further up the chain. It looks at wholesalers, producers, basically inflation before it gets to you, right? Before the markups go into the goods at the store, what kind of inflation or what kind of price changes are happening on the wholesale level. So wholesale numbers, or the producer price index number, is going to be coming out here this morning in about 10 minutes. We'll see if that causes any stir in the markets. I've seen producer price index numbers where it causes a big move in the market, and I've seen moves that are very small or uneventful. The other one is, of course, the unemployment claims. I'm still bullish overall on the top setups here. We've got NASDAQ. Let me see. So NASDAQ, we've got gold, platinum, euro dollars back on there, which is interesting. Copper, the Nikkei. So these are some of the bullish readings that I currently have. And on the bearish side, let's just flip this score around. Really light. So really only getting dollar ZAR on there, which is not a currency pair that I trade. So pretty much a light watch list today. What we'd be looking for on the gold front, by the way, would be again, break through this level of resistance, right? If you can get prices going here, if the producer price index comes in cool, we may have a bit of a catalyst to potentially move higher in the price of gold. Again, watching this 2,700 level to see how things react. At the end of the day, we don't know what the producer price index numbers are. We don't know what the unemployment claims are going to be. So we react to what's happening. I said this yesterday for like 5 minutes. I dedicated to this rant, so I won't go very long. But please, if you're somebody who looks at these events as opportunity to make quick money, I'm going to buy it right before or short it right before or something like that, please be really careful. We don't know how this stuff is going to come out. We don't know what the numbers are going to be. If you knew what the numbers were going to be, and if it was common knowledge somewhere, the prices would have already moved to the right places, right? If I knew today that inflation was going to come in really high or really low, I would already go and place those trades, and the markets would move based on that. So we're trying to just wait and see what happens and get a better idea or understanding of what might come next. Indices here are flat this morning, have not really made any big moves. We had a big up day yesterday on the NASDAQ. S&P also had a good day yesterday, and the Dow Jones actually had a poor day yesterday, held down by healthcare, utilities, industrials. There were some sectors that did poorly yesterday, but technology and the mega cap, right? The ginormous companies, Apple, Amazon, Google, Nvidia, did overall pretty well. So something to think about on that front. All right. Unemployment claims came in higher than expected. Core PPI came in as expected. And PPI came in higher than expected. Interesting. So sort of a mixed report here if you think about it, because of course this is weak for the dollar, This is strong for the dollar. You had an uptick in inflation, but you also had an uptick in unemployment. I'm wondering if that's a positive response for gold. Slightly positive. Stocks pretty flat responding to that. Dollar index, let's go look at some charts individually. The dollar index initially moved lower, blipped lower here. Not a huge response though. And then pushing back higher here. Let's take a look at euro dollar. Euro dollar's been trading lower here in the last several hours. By the way, I have a long position on dollar Swiss, which is going well because the Swiss National Bank actually cut rates by 50 basis points when they were actually only expected to cut by 25. So Swiss franc is weak this morning, which is great for my position. I am long dollar Swiss. So we'll see. I'll update that position in the VIP room, by the way. I did this morning just kind of give a commentary on dollar Swiss franc, but looking interesting here. The dollar looks decently strong, especially against its peers. NASDAQ slightly lower here this morning. We'll see if that can give way to a bigger pullback. Again, I mentioned this 1,700 times, but I'm really only interested in the NASDAQ if it can give me a larger scale pullback. And at this point, 3% gets you here, 6% gets you here, 9% gets you here. I mean, those are all healthy pullback levels that I think we very easily could see. I'm not necessarily bearish on the market per se, but I do think that the market is a little bit stretched. I think that sentiment is stretched as well. And again, sentiment can stay stretched for a while. I just think that for me, what that means, when sentiment gets really stretched, guys, people ask me sometimes, Nick, how do you use sentiment, right? Because on the Edge Finder, we also have this tool called Retail Sentiment. People love this tool. Let's go just look at our major currency pairs. How do I actually use this indicator here on the Edge Finder, right? Well, what I look for is I look for contrarian readings, not necessarily as entry timing tools, but as added confluence to an idea. So let's take a look at dollar CAD. Why not? Dollar CAD currently, dollar CAD has been trading up, and away. And what I find interesting about this is that, look at this. Dollar CAD is actually really bearish in terms of retail positioning. Retail traders seem to be shorting dollar CAD as it drifts and trends higher and higher and higher. The reason I bring that up is that that is getting us a contrarian bullish signal on the Edge Finder, because believe it or not, retail traders are actually trying to short this rally. You might think, well, does that mean everybody's chasing it? Well, actually, interestingly enough, retail traders are actually trying to fight this move. They're trying to short this move continuously, right? They're trying to bet against this move, and the market just keeps ripping through their stop losses higher and higher and higher. So that actually, to me, gives me like this slight bullish lean to continue to look to play that move until it truly changes directions. So sentiment can be really useful. It's not necessarily a great timing vehicle. I don't use sentiment as a timing vehicle. I use it as just a confluence to ideas or setups that I like, whether it be from the fundamentals and technical side of things, kind of as a confluence. So yeah, again, kind of a mixed report here this morning. Producer price index was hot, but unemployment claims were light, as in worse than expected. So a mixed response here. Let's take a look at some more charts just to see how things are responding. NASDAQ slightly lower, S&P slightly lower, Russell lower a little bit, Nikkei's down a little bit. So let's take a look at gold. Gold, again, mixed response kind of makes sense if you think about it, right? Because what's this going to do to the dollar? Well, unemployment claims weak. That should weaken the dollar. But PPI was high. That should strengthen the dollar. So we would expect kind of a mixed response, which seems to be what we're getting. And if you're disappointed by this, you're like, oh, I was hoping for a really violent move one way or the other. Just remember that most of the time, the market doesn't get big surprising numbers. Most of the time, the market kind of gets what it was thinking. That's what makes big, huge news events sometimes really exciting, is when they are very surprising. But today's numbers, and yesterday's numbers for that matter, were not super surprising or shocking to the market. Again, producer price index was higher than expected, but unemployment claims was also worse than expected. So you get this mixed response for the dollar. So that makes a lot of sense. For me, the way I'm going to score this personally is, again, a +0. Because if we were to say, let's talk about dollar bullishness or weakness, this would be a +1. This would be a -1. So they just kind of cancel out. It's neutral. I know it's kind of boring, right? It's not exciting. It's not, oh my gosh, we have a huge, massive, decisive day in the market. I know that that's more exciting, and we kind of, those days are fun. But today's just maybe not that day in terms of market data. Getting a little bit of a neutral mixed response. And maybe that is very much showing up here in the NASDAQ, where we had this big update yesterday, and this data kind of just brings you back to a little bit more neutral. So maybe neutral point is literally right there in the middle. So I don't know, NASDAQ down a little bit here today, not the violent moves.
I am keeping an eye on USD. It's, overall, I would be bearish because of where we're trading the higher time frames. We come back to the top end of this range here around 107. So at these areas, I'm only looking to sell until we actually break through, and then maybe you might see a bit of a trend back to 113. So that's kind of where my focus is, looking to take some shorts. But at the moment in time, we've seen some upside, and looks like we're struggling at this level. So my kind of bias, at least for the next few days, would be if we can hold on to this 106.7 area. I do think we're in store for a move back down. So possibly there could be some nice buys in Euro USD, which is the pair I'm looking at the moment, which is pretty much trading at the same area in respect to what the USD is doing, of course, with their correlation. Coming back into a nice area of support as well. So leaving behind a big wick at the moment. I'll be looking to take my entries on the 4-hour time frame. So I'll be looking for some engulfing candles in that direction. But it's in a nice area where, again, we could bounce and see a higher low. Should we break through this, then we might be seeing a pretty bearish Euro USD. And of course, if we do break through that corresponding level on the dollar, probably see a pretty bullish dollar back to the highs as well. So overall, I'm only going to be looking to sell because of where we are on the high time frames. But I want to see price reject this level, and hopefully it can see some downside. But we respect the support really well on NFP, so I'm unsure how far it can go. If we can get a push back to here, that'd be great, but we may very well bounce again and continue higher. But that's kind of what my outlook is for dollar.
Makes sense. Looking at the higher time frames, weekly chart, bumping up into some levels of resistance. Dollar's been having some difficulty getting through this 107, 108 area. Perhaps, like you mentioned, maybe it's going to go retest that 100 level again at some point or another here. We'll have to see. Okay, so euro dollar, looking at potentially bullish setups on that front. If we can get some sort of candle confirmation, really cool. What about Marco? Dollar setups, any type, Aussie dollar, euro dollar, pound dollar. What are you watching today?
So I did try to get in on a buy setup right here on the Aussie and US dollar, counting on the Aussie strength and dollar weakness. I saw a descending channel and a nice momentum to the upside. Even on the daily chart, it looked pretty descending to me, so like some bullish price action was expected. So I got an entry as well, simple break and retest, so a little bit of a pullback, break of the high with strength, and then a retest of this level. Small stop loss, but I did get stopped out in the end, so this was a loss. Still bullish though. Overall, I do think the story is bullish for AU. For EU, I do think it's going to be pretty similar, kind of breaking the lows with weakness. Now pausing a little bit here. If I take a look at the DXY on the daily chart, the bullish momentum has definitely died down. We had this massive rally of dollar strength, but this price action looks much, much different than what we had here. So to be honest, I'm not expecting much more strength from the dollar, and I'm gonna be pretty bullish on my dollar pairs, and I'm trying to get in on some long setups. So first try failed, on to the next one.
Okay. Yeah, no, interesting. You guys are kind of on the same side of that, looking for some dollar rollover, looking for Aussie dollar strength, euro dollar strength. Really curious to see how things shape up on that dollar index on the daily chart here. Yeah, it's definitely been in consolidation at these levels. I'd be really curious for bearish looks or bearish setups. To me, would be like if we can break that 105.5 level. We very well could see some lower pushes. We're actually having currently the ECB press conferences going on. We'll see if anything comes out of there that could perhaps strengthen the euro, which of course is the largest weighting of the DXY is the comparison to the euro. So if you get some euro strength, that could shape things up a little bit, but we will have to see on that front. What about metals? Gold, silver? Are you watching anything here? I know last time, Miko, you said you were generally speaking more bullish on silver, if I remember correctly. Are you still looking for setups, or are you in one?
Yeah, I'm still looking for some longs on silver. I haven't quite got one yet, but it's taking its time and it's setting up well, so no need to rush. But the idea is that we've had a really big swing to the upside on the daily chart, and I'm looking at this bearish move that we saw over the past couple of months to be a pullback of that for now price to continue higher. And I really like silver because all the higher time frames are still moderately pretty bullish, so it's nice to know that I'm kind of got all of that higher time frame backing in that same direction. So the idea is to find some pullbacks at some point. Not quite happy with the current price action just yet. I kind of want to see a little bit more to the upside because it is pretty corrective now. I like it when we see some really nice strong swings, really impulsive price action, and look for pullbacks after that. So I'm kind of waiting for price to be a little bit stronger on the move up, and then I'll find some pullbacks. I like this level here, so that's probably where I'm going to look to take my buys from. But the idea is to find some entries, expect higher prices, and see if I can trail stops back to the high there, maybe further as well. But yeah, very, very bullish on silver still.
Yeah, and just to talk on gold for just a second, we're sitting right now at a pretty key level of resistance, this 2,700 level. A little bit of a rejection here this morning. I'm really curious to see if gold can, break through this high. What I love, and we've talked about this many times, Miko, is the relationship between gold and silver is really interesting because when gold actually starts to trend, interestingly enough, during that rally that we had in gold this year, some of my best trades were actually longs on silver because I liked the index. In a similar fashion, like the sympathy trades can be really interesting. So like in a similar fashion, like this year, if you were really bullish on the NASDAQ and it's been trending up and away, you might have actually been able to pick some individual stocks or even like sectors, things that actually could benefit even greater from that push. Another example would be obviously crypto, Bitcoin with kind of being the index, if you will, and then altcoins being the more aggressive option. So, there's like with every scenario, there's like the lower volatility options and then the higher ones. So I think silver is sometimes confusing to people because people think gold is more volatile because they trade on Forex brokers, but in actual terms, percentage-wise, silver moves a lot more than gold. It's just that the contract size that CFD brokerages use makes it appear like gold moves more, but it actually, in fact, does not. So in terms of price percentage. Anyways, same question to you, Marco. Are you watching any metals, gold, silver? Or I know you don't necessarily trade them, but for the audience, what are your thoughts on them?
So looking at the daily chart on gold, I do see a pattern which is a bullish one, a V reversal, then a bit of a range, and now continuing up. So if we get the confirmation, and the confirmation would be another leg up, then I would be pretty bullish. Until that happens, I'll of course be patient. And in regards to silver, it's looking a bit more corrective. I'm not seeing any high probability patterns printing, but if silver follows gold, then if I had to give a bias, it would be a bullish one because of this V reversal pattern. But that is about it. The confirmation is still not there, so I would wait for that one more leg up like this.
Yeah. Yeah, and again, gold has had a really remarkable year overall. We've seen a little bit of a stalling out here towards the end of it, but you guys have to remember, for the audience, this is one of the most exceptional years. I think it actually might be the most exceptional performance in the price of gold in my trading time. Up at one point, I'm not sure exactly what it is, but up 30+% at one point here. I'm just going to do the quick, simple math. Yeah, I mean, you're sitting at like a 30+% return right now, 1.36%. I mean, that is an incredible price move in what is traditionally in the finance world considered a really boring, slow, low volatility investment asset. I know, again, people get that, they hear me say that, they say, what? But in actual return percentage basis, it's usually a pretty low volatility asset compared to like the NASDAQ or stocks or things like that. Cryptocurrencies move in percentage form much more than gold. So, just something to think about.
So PPI came out same on a month-on-month rose. So yeah, I would expect some potential downside movements on NASDAQ, but I don't think it would be anything major. But yeah, overall, I wouldn't suggest the NASDAQ is bearish in terms of the overall trend. Obviously, we are continuing to move up. We've just created a new all-time high. But yeah, some sort of correction would be completely sort of natural here. Something possibly like this. Let me just remove the previous drawings. Something like this would be fine in my eyes. Mo, good to see you. Maybe 1 to 2% down. Let me just see. So we're already about here. I wouldn't say 1 to 2%. I think 1% maybe. I think 2% will be quite a large move. But yeah, I think my main focus, if you're looking to go long on NASDAQ, would be mainly a fill of this imbalance on the left. Is there any advantage of using line chart instead of candlesticks? Yes, in my eyes. So I've actually only recently started using line charts, and it's a lot easier. So I only use these line charts for swing trades. And when I'm swing trading, I don't really pay attention to technicals. I'm more looking at the overall market, the overall trend, and obviously key levels. So in this situation, I actually took a short on Euro AUD last night. I don't care what the candles looked like. I knew that this daily candle was yesterday's daily candle was about to close bearish. We have this level of resistance through here. Morgan Stanley's also short. I'm bearish on the euro, so it made sense to go short. There's no crazy technicals involved here other than the 200 daily moving average. It's right here. It's a bit difficult to see, but yeah, I'm just waiting for that to break and then we'll smooth sail into the downside. And just to, I always like to be transparent, so you can see the open position here. I also pop my FX book on screen as well, so you know that I am worth listening to. So November was a crazy month, actually. This month has been a little bit disappointing in terms of the return. I was up about 4.5%, had to take a little bit of a hit on one of my positions, or a few of my positions. I've managed to climb my way back to slight profit. But yeah, nothing too crazy, really. Standard stuff. So yeah, anyway, sorry, back to the advantage using line charts. You don't get the wicks, essentially. You get the raw price movements. So for example, you might have like a large wick on this candle, but that's not accounted for in the line chart. So it just helps get rid of a lot of the noise that you might see when using candlesticks. Can you share settings? What settings? Settings for what? TradingView MT5? Yeah, exactly. I have lots of platforms going on, so let me know what settings you want to know about. I'll tell you. No gatekeeping around here. Hello, James. How do you know whether Morgan Stanley is shorting it? I've been looking for investors' reports from them. Loke, I get bank reports every day from all of the large institutions, Morgan Stanley, Goldman Sachs, Credit Agricole, etc., etc. So it normally discloses them in there when they're in positions. What's your take on New Zealand US dollar? I think we're still in for some downside. Today's US dollar news was mixed. So that leads me more to say that the trend is going to continue. The New Zealand dollar is not exactly in a great place to long. And if I'm staying with my overall bias of going long on the US dollar, that means I would then go short New Zealand US dollar. It's now just a case of where do we get an entry? Because at the moment, there isn't really one, especially for a swing trade. So I would love to see a pullback up to these previous highs. But to be honest, with the momentum in this market, the way that we're seeing this develop, it seems like we're just going to continue to run to the downside into this next level of support. So any pullbacks or any significant pullbacks we see, I'll be looking to go short. But yeah, at the moment, there is nothing there. Line chart settings, there isn't any settings for these line charts. Just change here, go from candles to area chart. That's it. NZD's poo-poo, economic indicators are bearish. Yeah, sure, and I completely agree. Sneaky Snake, I'm good, thank you. How are you? Yeah, we can have a look at gold. Oh, actually, we're having a nice pullback. It might be an opportunity to go long at some point here. So we're seeing a pullback. I spoke about this yesterday. And really, if we're just looking at general zones in this market or general levels, it would make sense for us to pull back or to see a pullback into this previous level of resistance. It would also help price come and meet this 200 moving average. And that to me would be quite a nice entry point to go long from somewhere around here. I would have my take profit at the previous highs, previous all-time highs. Stop loss just below here. This would account for this level of resistance or previous resistance and the moving averages as well. Give price some room to breathe. You still bearish on euro? I am. Yes, we just had a rate cut for the euro, so it just reinforces that bearish outlook. I think they're going to have to continue the rate cuts really the way the eurozone's going. Sebastian, I'm not in a swing on NASDAQ. That was just an example position on what I would be looking for. The only position I have open is the Euro Australian. Pound yen, Swiss yen? Okay. Swiss yen. It's funny, actually. I was saying yesterday that this doesn't look like a bad level to go short. Looking for a complete retracement here. I basically said that word for word, and that's happened. So, you can call me, the algorithm. You can call me Enigma, whatever you want to do. Obviously, I'm joking. I don't fall into those ideas. But yeah, I think overall, Swiss yen is definitely on its way down. The yen in my book is still bullish, although I'm not expecting a huge pump now. It's more a case of it's going to be a little bit choppy and slowly have a sort of correction, at least back up to where it was around here. So in terms of levels, really, if I was going in for a short, I'd be first looking at the previous low and then the next low down here. That's kind of the only two target levels I see at the moment. The daily also has just rejected our 200 moving average here, which is a nice sign. It looks like the weekly candle as well has got a lack of bullish momentum. So if we look here, so far we're failing to engulf the previous weekly candle. So from a technical aspect and from a fundamental aspect, it seems like quite a nice position to be in. Actually the yen pairs have disappeared off the edge finder, but they were quite bearish. So that basically covers all of the yen pairs, to be honest. They're all very, very similar at the moment. The price action is almost 1-to-1. Do you think the Swiss will continue to be strong because of its reputation and stability, even though at some point they might get some negative rates? Yeah, interesting. So we had a rate cut this morning. Yeah, it was just double checking I've got my information right. Yeah, it was a Swiss. So they had a 50 basis point cut this morning, which obviously isn't necessarily great. However, the Swiss is always, in my view, quite a stable currency to buy into. Although in this situation against the yen, considering we just had a rate cut, it makes sense to really go short in my book. Although I wouldn't be shorting now. Again, as I always say, I would be looking for a correction of the move that we've just had that was driven by this rate cut from the S&B. James in the gold sell already. Good stuff. No, I'm not in any positions apart from Euro Australian. But yeah, I think we might see some short-term downside on gold. Your Euro Australian long? Okay, well, let the best man win. Euro dollar shorts. I agree with that. I actually just got out of a Euro dollar short. Here, just took a quick scalp on this one. Oh, actually, yeah, the positions I left you guys with yesterday. Obviously, I told you I was in some short positions on pound dollar, US dollar. Sorry, pound dollar and euro dollar. So that's how they turned out. Didn't quite get the return I was wanting. It was quite lackluster. But obviously, you can't turn down money. Got to take what the market gives you.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.